Hey, thanks for tuning in again, everybody, and welcome to the fourth edition within the series of Stage Analysis, explaining Stan Weinstein's market cycle theory. This section is on Stage 3 distribution. So how to identify a Stage 3 distribution? Stage 3 forms after a buying climax, meaning bulls have lost the momentum. Price will oscillate between the Stage 2 top and the Stage 3 anchor point, and sentiment will be extremely bullish. Media outlets will exclaim that this correction is the buying opportunity of a lifetime. So again, let's head back to this chart. Stage 3 is going to follow a Stage 2 uptrend, so we're going back over here to the left side. You can see we put in our Stage 2 top, and that's going to kind of become the resistance for the Stage 3, and then we come down here, very similar to the Stage 1, we put in our anchor point, and we look for price to hold in between this resistance and the support level. Supply and demand of a Stage 3. So demand and supply have reached an equilibrium point. There's no clear bullish or bearish trend. You know, they're kind of duking it out. They're seeing which one of them has more firepower. Strong hands are dumping supply onto weak hands, and the weak hands in this case are usually uninformed retail traders that are buying at the top. You know, they're having all that media attention. They're seeing about their favorite crypto in the newspapers. They're seeing about their favorite stock all over Twitter. They think this is the buying opportunity of a lifetime because they missed out on that initial breakout from Stage 1 to Stage 2. And they think that this pullback is going to be their chance to really load up and, you know, be able to ride that next wave up. And then finally, price will repeatedly test the demand zone, the support level, and each test is going to weaken that support level. So going back to our chart, let's say this $26 range is our support. That's going to be our demand zone in this Stage 3. So each time price comes into this 26 level, you're going to have buyers stepping in, and they're going to introduce demand onto the stock, and that's what's going to propel it higher. But each time the price comes down to that $26 level, the liquidity of those bullish traders or investors is going to diminish because eventually everyone runs out of money. It's impossible for somebody to be able to hold the level forever because eventually they're just going to run out of cash and they're not going to be able to buy it anymore. So as you can see, finally we get that breakdown, and that's when we kind of go back into our Stage 4 decline, and this is due to the fact that the level has weakened. The bullish participants are no longer able to afford to be able to hold that $26 level. So using moving averages to identify Stage 3s. Again, if this looks familiar, it is almost exactly the same as a Stage 1 base, just in the fact that, things are kind of reversed now. So after transitioning from a Stage 2 breakout, price will still be above the 20-week moving average, and the 20-week moving average will have a positive slope. So going to our chart, as you can see, in this case, the whole time, price stayed above this 20-week moving average during the Stage 3 until it finally broke below, and that's when your Stage 4 formed. And that slope came in positive. We're developing this trading range. Slope is still positive, and then finally we get our zero slope. So after finding support at the anchor point, price will move between the moving average and be rejected at the Stage 2 top. Price will then oscillate above and below the moving average, and the moving average's slope will gradually go to zero. So that's what I was talking about. We get that slope that becomes parallel with the x-axis. And in this case, price stays above the moving average the whole time. But in our real-life chart examples, you'll see what I'm talking about when price is oscillating above and below that moving average. And then finally, as the Stage 3 progresses, the moving average will gain a negative slope. That negative slope often signals that the Stage 3 is coming to an end, and a Stage 4 decline is around the corner. So, as you should know, the slope of the moving average is really, the most important thing if we're trying to do any forecasting. If the slope is down, you kind of just have to assume that price is going to continue to move down. So that's what we see here. We get that slope down, and then price continues to follow it. So life cycle of Stage 3 distributions at the beginning. After putting in a Stage 2 top, there will often be a violent reversal. Volatility will be high at the beginning of a Stage 3. In the middle, price will oscillate between support and resistance, crossing the 20-week moving average numerous times. This is known as the whipsaw trading environment, and volatility is lessening. You'll often see the moves between support and resistance start to condense, and maybe you don't get that move all the way up to resistance. You kind of just keep banging on support. And then at the end, volatility has contracted significantly. You're not getting those huge price swings that you saw in the first place. Price is probably just hanging above that support level, and that price gets below the 20-week moving average and moves even closer to that support, and then finally price breaks out below support, signaling a stage 4 decline. So let's go to our chart examples. Got some good ones here for you. So this is Disney from 2000. Here's our stage 1 base. As you can see, we form here, and then we finally break out into our stage 2, and then the stage 2 puts in a top. So let's draw our top there. That's our resistance. And then after breaking below the 20-week moving average, we put in our anchor point. That's going to be our support. And then here's our oscillation above, below the 20-week moving average. Right here on kind of in the middle of 2000, we get this big bar that keeps everything going, keeps that moving average pointing up, but then we get these reversal days and the moving average starts to slope down. And then finally, you see the slope has gone significantly to the negative side. Price breaks below this anchor point, this $35 support, and the stage 3 is no longer. We are now in our stage 4. Next up, we have Apple around the same time period. So we put in a peak in March of 2000. That's going to be our stage 2 top, and then we break below the 20-week moving average, put in our stage 3 support. And then as you can see, we never hit that resistance again. Price could just barely get over the 20-week moving average here. Its slope is negative. Again, price gets a little bit higher. Slope is only flat at this point, and then we get this huge bar down. This is a 50% down move, and the slope of the moving average is clearly negative at this point. That's our stage 3 turning into a stage 4. Next up, we have Home Depot. This is Home Depot in June of '83. So we get this massive move coming out of the IPO for Home Depot. It goes straight up for, about 2 years. And then we put in a stage 3 top. The whole time price just trades sideways. This sideways consolidation period allows the moving average to catch up to price, and that's when we see things really start to get interesting. So once that moving average catches up to price, we see that break below, and then we see our support form right in here, and that's our stage 3 support. And then as we continue farther, we see that slope start to go negative, and then price breaks below the support of the stage 3, and it moves lower. Next up, we have Johnson & Johnson. This is from that late 1990 era. So let's say our stage 2 top is right in there. Let's draw on our resistance, and then here's our support. So this one's very easy to see. This is a very choppy environment going into early 2000 and even in early 2000. Right here in January, we start to see price continue to stay below, and then as price gets closer and closer to support, it brings this moving average to slope down, and after we go below this 44 level, price is in our stage 4. And then finally, we have Goldman Sachs. This is actually a very recent chart. It put in our stage 3 top, or our stage 2 top, let's say, or the final top came in November of 21. And this whole time, price has kind of just been barely, creeping higher. The slope has dramatically gotten more parallel to the x-axis. It's starting to go 0. And then as we continue along, we'll say this is our stage 3 support right here. And then we get this gap down, we get a retest of support, and then it's off to the downside races. And that's where we're kind of sitting right now with Goldman Sachs in that stage 4 decline. So that's a pretty quick summary of stage 3 distributions. Like I said, it is the exact opposite of a stage 1. If this video seemed very short, it's because a lot of these concepts were already covered in the stage 1 video. So if you're kind of confused, go watch that stage 1 and then the outcomes are just reversed. Thanks again, and I'll see you in stage 4.